Robschild, no investment advice. Welcome to the show where we view financial markets using Ben Graham's investment philosophy, macro, technicals, and crystal ball gazing. Today is Thursday, December 5th, 2024. Today's episode, I wanted to bring up first the 2-year, 10-year Treasury yield spread. After being inverted for a historic amount of time, signaling a potential very bad recession, we finally reverted, and this is typically when the recession would happen, is when this steepens above zero. Again, normally when you lend your money out for a longer period of time, you want a higher return. When this is negative, you actually get a lower return because the central bank is trying to get people to save money instead of spend money, trying to make it harder to lend, harder to borrow money because it's more expensive. When this goes negative, the Federal Reserve, the central bank, is actively, purposefully trying to slow down the economy so that inflation doesn't get out of control. We're at the other side of that. The cuts just recently started, and we are uninverted. And I just bring it up today because very recently we've been kind of bumping along at very near zero, at 0.02%. While looking across the curve from the Fed funds rate on this side all the way out to the 30-year rate on this side, we can see that it's pretty clear that we're headed into more reversion instead of back into inversion, especially looking at the 2-year to the 20-year and 30-year, clearly much lower than those further out Treasury yields. So I have my strong doubts that we're headed back into inversion. That can happen, though. For example, if tomorrow's employment report comes out hot, if unemployment goes back down and things are peachy, everything's good, well, that's going to signal to the market that the Fed will need to be even tighter for even longer, making the 2-year perhaps go back negative to the 10-year and extending this inverted yield curve. And the longer it gets extended, typically the worse the eventual outcome happens. So my crystal ball says the unemployment report will be higher. And I think it might even shock markets. I think this might be the report that shows unemployment at a high enough rate that it can potentially mark a high all-time long-term top, perhaps in the S&P 500, for example. I suspect that even if we do re-invert, though, between the 2-year and 10-year, it won't be for very long, especially just because, as you can see, there's a bigger difference again between the 2-year and 20-year and 30-year. So in order for us to really be all the way inverted, the 2-year will actually, in my opinion, need to get above the highest part of the long end of the curve at the 20-year, currently sitting at 4.43%, while the 2-year is currently at 4.15%. Right now, the curve looks much flatter than it has for a pretty long time, and typically when you get your recession is when the front end drops below the long end, which is funny because that is getting back to a normal state, but it's also saying that, okay, actually, well, the Fed has to be accommodative at that point, that they have to lower rates in order to help things going. And that's usually when things are falling apart and all of the yields need to drop. This market, along with all markets today, are really waiting for tomorrow's employment report to decide where to go. The SOM rule being triggered 3 months ago signaled that, the recession is basically here. So will we see evidence of that continue? Or is this the one time in history where the SOM rule is wrong? We'll see. Tomorrow is a real big day. Moving on, next thing in today's episode, Bitcoin. Holy moly. This is the Bitcoin chart on a daily time frame, each candle representing one day. Look at the size of these wicks right now. Look at that. Going all the way up to 103,000 and a low of 92,000 within one day. That's massive. There is a huge fight between the bulls and the bears today. And where right now, there's an hour and 13 minutes left on the clock for UTC time, which is typically how the traders view Bitcoin. Most people, when they open their chart, it's a psychological thing. It's like, but that's what markets are. Markets are people. They're, not the most intelligent beings all of the time. And the pattern that develops here will be significant. It's literally like watching the Super Bowl here with an hour and 12 minutes as I'm recording this left on the clock. Will the bulls take over to the end of the day and send us soaring higher, or not? If not, these wicks kind of signal that this could be a reversal to the downside. The bulls need to prove they have strength today in order for this to continue higher. Just before I was recording this show, I was watching this wick didn't exist. I was watching it just drop. It was going so fast. It was unbelievable. Anyway, very exciting. Again, I'm not participating in this. I'm not touching it with a 40-foot pole. In general, I don't like crypto. Not a fan. One big argument that I think I want to put out there for Bitcoin is I want to ask Bitcoin believers, Bitcoin holders, a question. My question is this: what is the worst thing that can happen to Bitcoin? What's the worst possible thing that can happen to Bitcoin? What is the worst possible price that Bitcoin could get to? My answer to those questions is for Bitcoin to have a value of zero, of nothing. I can easily imagine a future in my crystal ball where we look back on the Bitcoin mania phase, is what they'll call it. They'll call it a cryptocurrency mania in the future, I believe. I see that that's a potential future outcome of crypto. And I'm not saying that it will necessarily play out, but it's within the realm of possibilities. And with it being in the realm of possibilities, that should give people a sense of understanding the type of risk involved with cryptocurrency as a whole. If you ask what's the worst thing that can happen to gold, is gold going to lose all of its value? No. People won't be just putting gold in their garbage can. That will never happen. But Bitcoin could go to zero. That's just an argument I want to throw out there onto the multiverse. Overall, markets today, we're all just waiting to see what happens on Friday with the unemployment report. This could be huge. Could be a really big day. It could be nothing. If it ends up being flat, like 4.1%, then the market's just going to be like, is it going up? Is it going down? I'm still confused. And, and then we'll still be in this sort of state of purgatory, I guess we can call it. We'll dive into a few charts momentarily. None of the daily reminders have changed. The daily reminders, I think, are extremely important for any active investor or trader to have in their mind on a daily basis. Although I don't read through these, I only read through them and explain them on Mondays. And this week that would be 12/2/24. It's the one with a bear inside of the ball. With no changes in the daily reminders, the crystal ball readings remain the same. And I also walk through these on Mondays, along with my own portfolio, which I believe has good safety and good chance of good return, and is not advice. Starting with the obligatory S&P 500, just going sideways, not really doing anything. I mean, we had an intraday all-time high of 60.94.55, but the market is clearly waiting for tomorrow's data to sort of give it some kind of signal as to what to potentially do next. TLT, my favorite place to be, still within forming a pattern, forming a candle at the top side of this previously drawn megaphone that I drew yesterday. Amazing. Little candle, bigger, bigger, bigger. And then, if anything, this might be considered to be a bull flag knocking on the door of the upside. And so it looks like to me, it actually wants to break out to the upside. Again, tomorrow's data, it can be huge for all markets. So we'll see what happens. All about that unemployment report. Next up is gold in the price of dollars. Recently, I've been talking about this bearish flag with a time count 1, 2, 3, 4, 5, 6, 7, and we broke to the downside, which is expected when you have a bear flag. So to me, gold looks bearish right now. That would make sense. Gold seems expensive to me. When you compare it again to the price of a house, the price of copper, wood, anything really, it's gotten ahead of itself in price, and so I expect it to get back to what is considered to be a normal historical price, sooner or later, and maybe that time is sooner now. Certainly on a daily basis, it's looking bearish to me. While we see an enormous amount of speculation and greed in many markets, like the crypto market, the semiconductor industry, which I'm very bearish on, not all markets have lots of greed in them. In fact, some of them are in extreme fear mode, and one of them, ironically, is an investment place that I don't like, but I can see probably has more value than it currently is priced. And what I'm talking about is, of course, MSOS, the cannabis ETF, currently at $4.17. For reference, I just want to bring up, if we scroll out, let's put this on a monthly chart. Or is that, no, that's too much. Let's put it on the weekly. Okay, weekly chart. This ETF began in, let's see here, August of 2020 at a price of around $23. It had gotten up to a high price of $55. Since then, it has dropped by more than 90%. Now, this isn't a penny stock. This is an industry, granted. This is an industry that has, some regulatory risk for sure. It's unsure how much money can be made in this industry, but are these companies worth 90% less than what the market expected, only a year or two ago? One other thing to bring up is that people that are selling stocks of these companies and people that are selling this ETF, they are losing a lot of money. When you get to an all-time low in the price of something, there are people that are selling at a loss. That's what's happening here. People are selling it. They're giving up. They're saying, no way, I don't want to own this anymore. It seems like it's just absolute garbage. I know I lost a lot of money on it. And so in those situations, we can call those distressed assets. When assets get distressed, that's when they become a little bit attractive, even if they have regulatory risk, even if they don't seem like they might even be worth anything. They must be worth something. And I've looked through the financials of some of these companies, and they have equipment, they have land. One of the biggest companies, Tilray, it's not even, it's a big part of this ETF, and it doesn't actually center all of its business around the cannabis industry. They make, I think, sports drinks or something like that. And so, there's more. I think there's clearly more value than priced in here, and so I'm finding it very interesting. I have currently a small position in Tilray myself, actually, at the moment. I just had to bring this up today because we are at a closing all-time low in this fund. Previously the low, which I actually successfully somehow bought, like to the penny, I think it was of the low of October 23. Like literally, it was the actual penny that I somehow managed to get in there. But anyway, the previous all-time low was, 485, something like that. We're at 417. That's almost like, I mean, what, 15% lower than the all-time low that was already like, over 90% lower than the top of this market. This is getting just like so cheap that I can't help believe that there has to be more value than priced in right now, and the people selling are mad and distressed and selling at the wrong time, like Mr. Market always does. But anyway, that's all for today. That's all from me and my crystal ball. Hope you enjoyed, and thank you for watching. Look out for that employment report tomorrow. It could be humongous. Let's see, what does the crystal ball say? Ooh, something's coming. That's all from me and my crystal ball. Hope you enjoyed. Thank you for watching, and see you next time. Robschild.